Let's take it to the next level.
That's the way to do it. A lot of businesses started that way.
Right? I came yesterday. I didn't see the email.
Oh, sorry about that.
No, it's all right. It was my fault. I saw that the email came and I never opened it. So when I got here, I was like, okay, where's everyone? And then I checked the email and I was like, oh gosh, we'll start to tomorrow.
We had a couple of late signups.
Wonderful.
Yeah, I mean, great. 16 total,
No way. Oh wow.
but that includes online and
Wow.
in
That's
class.
pretty good. It's not easy, like working and kids and like today. This is my second try to pattern something today. I came in.
You know, another thing you could do is, have you ever entered your photos in the county fair? Oh, so the way it works is, well, let's see, they just had it in the summer, so it'll come out kind of in January. Just you can look online. They have a book to enter. It's free to enter. There's like 24 categories. There's portrait, still life, you know, everything. So and there's 3 levels. There's beginner, there's intermediate, and there's professional.
Really?
And you enter it, they judge it compared to everybody else who enters. And if you win a little bit of money. I think it's like $5 for first place or something. But you get a ribbon, and then you know you could say on your website or what you're advertising, blue ribbon winner.
That's,
Some
that's
street
pretty
credibility.
Cool. Yeah, that's pretty cool.
Plus, it's kind of just fun,
Right. Yeah. No, absolutely.
and it's free.
Oh wow.
And
what's
you can.
What's the place?
It's the Stanislaus County Fair. It's done in Turlock.
Okay.
So if you just Google Stanislaus County Fair, and then they'll post the exhibitor's handbook, and they do all kinds of arts and crafts and quilts and cookies and you know, the works. But photography is one of the categories. And then, let's see, this year, you know, they didn't have it because of COVID. So this year when they came back, they added some new categories, which included like computer manipulation of photography. So if you take the photograph and do something to it with a computer, then print it.
Really?
Yeah, that would be another category.
Very cool.
So if you want to see it, you can look at this year's.
Yeah,
I think it's still posted.
I'm gonna check it out for sure.
Yeah.
Wow.
And a few
You know
bucks.
a lot of stuff, Mr. Guerra.
Yeah, we just
Like, wow.
been around. My wife and my son actually got us into the fair thing. Growing up, I never really went to the fair. I think we did like once or twice.
I
But
think I have never been.
when he was little, he liked to see the animals. And now his daughters like to see the animals.
Yeah.
His wife hates animals. So that's a place they can visit. She doesn't have to go in. They can see all the cows and the goats and everything they want. And everybody's happy.
Oh, nice.
But we did enter a few items in the fair, and it's been fun just to see how they do.
Nice. Oh, that's cool.
And then, so I live in Merced County. It's a little bit different fair, but I think Stanislaus has it where they do day of competitions. So you don't have to enter ahead of time. You just show up with your entry.
Right.
In Merced, it gets you into the fair for free, so nothing else. Save a little money that way. And then they judge it right there with all the others. Win prizes.
Very cool. Good to know.
Yeah, just kind of fun. Like I said, get some street credibility.
Do we have a place where to charge the computers in here, Mr. Guerra?
We do.
Not next to the table.
Um,
Not there?
no.
No? Okay. Oh, wow. I have like 28%. There's one right here, so I'm just gonna put it in
Okay.
5 minutes while class starts. 10%. Sorry,
No problem.
thank you.
There's one back here. Sit at this.
Oh, perfect, okay.
They're all along the wall. It's a temporary building. Hello. Yeah, they're up there. Let's see where. When we started our school, we were right next to a convenience store. And so I said, oh, that's great. I think people can get their groceries while they learn computers. Hello. So my idea was we would hook up like washing machines and dryers so that people could bring the laundry, do that, buy their groceries, and learn computers.
That's a great idea.
Then I said we should hook up exercise bikes to the computers. So if you wanted to work on Excel, you had to pedal. And if you stopped, you lost all your work. So there'd be motivation. I said you could lose weight, do your laundry, get your convenience store items, and you're all set.
That is amazing.
But they didn't do it.
Well, you should do it.
They told me not to try so hard. No.
You should do it on your own. I mean, that's an amazing idea. Wow. I would never thought of
Yeah,
that.
until you lose your first Excel spreadsheet. Then I hate this. This is stupid. What are you doing? I don't know. I don't know if we could power enough to keep a computer going. Maybe you could these
But
days.
when you do your laundry, it takes like an hour, 2 hours.
Right.
It's done.
So do a couple things at once.
Right. Wow. That's pretty
Then I could do mine. Yes.
Can I use it all day at home or?
It's up to you. Yes, you can. I'm going to go through that. You can use the old one. We're going to go through, for those who weren't in the first class, we'll go through the setup. But if you want to use the old one, it's going to be in the same spot.
Okay, thank you.
Yeah, you're welcome. Actually, today, with wireless computers, you could take your computer to the laundromat, take the class. Like right now, you could be doing your laundry
Oh,
while
yeah,
you're listening to
for sure.
class.
They
So,
use the hotspot on my
Right.
phone. And yeah, absolutely.
if you're looking for the network, it's Patterson Guest, or I'm sorry, PJ USD Guest. Don't do anything. Don't send your social security number over because it is open. But since we're making up numbers, doesn't matter. Actually, it'd be funny if somebody hijacked our QuickBooks. They'd be really surprised.
I think it's not- yeah.
All right, well, welcome to the Advanced Bookkeeping class. Again, my name is Dan Guerra, and we are going to be using QuickBooks again. So if you've done QuickBooks before, you're all set. The class runs Monday through Thursday from 6 to 8, and we're going to be here for 3 weeks doing the advanced. Then when we're done with this, we'll take a week off, and if you're interested, there's a Microsoft Office class that comes next. And then after that's done, we roll over and start QuickBooks again with the beginning bookkeeping, and then the advanced, and then Microsoft Office again.
What programs do you use the 3 programs for Microsoft?
We do Word, Excel, and PowerPoint.
How long does it take to complete those?
They're actually in two, it's a 6-week class, but because there's 3 programs, we do 2 weeks, 2 weeks, 2 weeks. So if you just wanted to do like Excel, you could just do the Excel part.
Which time does it start first?
We start with Word.
Okay.
Word, what most people are familiar with.
And then do we have to sign in for, let's see if I want to skip Word and PowerPoint, but I want to come from Excel.
Yeah.
Do I have to sign for each?
No.
So
You just sign up for the whole thing and then tell me, I don't want to do Word and PowerPoint, I just want to do Excel. Fine.
Okay.
You're good.
I think I want to do that.
Okay, yeah, we're flexible.
So fresh, because I don't really use Excel. I got my certificate and I haven't really used it.
Yeah, and they've changed it a bit. We use the Microsoft Office 365, so it's online, just like the QuickBooks is. So if you want to use that, yeah.
Hey, what is the password?
Class-13, capital C, LASS-13. Domain is the whole thing.
I'm so tired.
So just like our other classes, if you do miss a class, every session, like right now, it's being recorded. Yeah, as he double checks to make sure he's not lying. And then you can review, the class from before, the night before, and then we keep them, and they stack up. So if you ever want to just take the whole things over again, you can start from the beginning and see all the classes.
Hey, no, we've been doing that.
Yeah, and so it's kind of a resource, and would leave it up there till YouTube disappears. So should be good to go. That one not working? Uh-oh.
I think so. I don't know.
Well, so today you should have received an email that looks kind of like this. And this includes our Zoom link. Each time it's a new Zoom link. The reason we do that is just to keep classes separate. So make sure you click on the current day's Zoom link. Otherwise, you'll be alone in an empty Zoom room. If you ever need to launch QuickBooks, there is a link here. There's a number of ways to get into QuickBooks. You can put it as a shortcut on your browser, or if you click this link, we set it up so it goes straight there. Or if you just go to intuit.com and then you have to go into login and then you have to do QuickBooks Online. So that's 3 extra clicks. Yeah. This is a lot shorter. But either way, so if you're ever like stuck where you don't have a link and you say, oh, how can I get in my QuickBooks from wherever you are? That's the way to do it. And then you do have a link to the Modesto B while we're here. And then down here is where you'll see the link to last night's class once we start the recordings. You should also have received an email like this. Your instructors invited you to create your own QuickBooks company. So if you get this, this is a license to set up a new QuickBooks. If you've taken the beginning class and you already have that set up, you can use that. We're going to go through the whole setup from the beginning. If you took the beginning class before and you want to do a new class, our new company, you can. It's up to you. For the people who haven't done it before, this is what you need to use to start your new company. Even if you took a class like 2 or 3 years ago, use this link because it's good for a year. And if it took it before, you'll be locked out. And the only way to get into it is to pay for it. If it was just class information, it's not worth the money. Might as well start a new one.
Which one would you recommend to use? The one that we just did for the
it's up to you. Either way, we're going to go through the beginning for people who hadn't done it before, just from the very scratch and set up a company. But it's going to be very similar to what we did for the beginning class. So it's kind of like a quick review. And I'm not going to spend a lot of time on it, so we'll get it done just to get it set up. But that way, if you just want to start with a new company fresh, you can. And like I said, doesn't matter. There are ways to merge companies too later on if you change your mind. You want to put it into one. So when you accept the invitation, you should get the screen.
start a new company?
Yeah, I am. I'm going to do it right now,
I'm gonna do-
but I'm going to speed through it. I'm not, when we did it before, we focused on each screen to explain what it was. So I'll go through it, but if you have any questions, please do stop me. But we're going to go kind of quickly. So once you log in, you'll have to set up a password. You should get this screen, which is QuickBooks. Welcome, glad you're here. With the license you have for this class, you can set up 4 different company files. Meaning, if you want to experiment, set up a new company on your own, by all means do it. If you want to see what like an attorney's office would look like, a pharmaceutical office, you can use that, and you can have up to 4. So by all means, use them. They're good for a year. And as I mentioned before, if you start, one thing you can do is set up like your experimental class QuickBooks file. And then you say, you know what, I want to try this for my little business. Then you can set up another one, and, make it for real and run side by side. It runs as a real business on this QuickBooks, just as if you bought it. Yeah, question.
How do we get into that page?
You should have, when you clicked on the accept.
It's because I logged into my account, so I just have to.
Oh, okay. So if you log out, here, I'll show you what happens. I'll show you what I had to do, because I have my beginning and I use my same email address to do this. So I'm going to close this. If you already have a QuickBooks on your account, when you click on accept invitation, it should bring up this screen. You don't have to. Like I said, if you want to use your old one, you can. I'm just doing it because she asked. This is how I got in. And I am setting one up from scratch, just because it is quick to do in QuickBooks. So if you've already got an account linked to your email, here's what's going to happen. It's going to show you both accounts, and you choose which one you want. Luckily, I have mine labeled beginning and advanced, so it's a little easier.
You said that we had that email. Okay.
The email should look like this. It's labeled, I hate this subject, action required, because what did half the spam say? Action required, click now, you're gonna miss out. So it looks just like maybe a spam message, but it's from QuickBooks Intuit Education. And then when you accept the invitation, click on that, you should get something. Like this.
So it doesn't matter, we're gonna use the same email, right?
Right. What happens the minute you click
So
this
for the
button?
new company, we really need the invitation, the link for the invitation.
Yes and no.
Okay, 'cause
Here's the yes.
I didn't receive the email. 'Cause,
Okay. Do you have your old class?
Yeah.
Okay. Because remember I said you had up to 4 licenses? All right, so you still have that. The only difference between the two is going to be what we'll do is you could set up a second company if you want to set it up separately. Remember I said you had 4?
Yeah.
So this will be your number 2. The only other thing would be the people who are starting now using the new voucher code, the license starts from yesterday for a year. The beginning one started from September for a year. So if you're going to keep it, probably a month won't make a difference.
Sorry, too many questions. So
That's okay. That's what we're here for.
It says on my email it's already taken. So I use the link that you sent.
Okay.
And then you send me to this.
Let's see.
And then so I'm creating the account and then just set on my email.
Okay, so you already have one. Sign in.
Yeah, well, I was using the account that we have for the past 2 weeks.
Yeah. It should, let's see if it gives you the option. Here, I'm gonna. When you get this one, this is one you do once. And the point at which you click this accept invitation, it assigns you the license. So then at that point, you just log in with your email. Like that. So here's mine when I log in. And there's always 2 ways to log in. I'm going to use the text message. So it just sent me a text code. So one use text code. And then, because I had one before, it should come like this. So Dan's General Store was my beginning session. And now I'm going to click on the advanced one. So I get 2. That's just because I use my same email for registration for both of them. And you could do that. So now technically I have 8 on this account, 8 different companies I could set up through the licenses on this account.
So I'm able to just find them together
Yeah.
and start.
Perfect.
Okay, so
That's it.
advanced bookkeeping.
Yep. And then we're going to
So
change it.
where do I add the other one?
When you log in, it should show up.
Because it will follow the invitation.
Okay. Do you want to use, is that the one from the beginning?
Yeah.
Do you just want to use that one or do you want to do it?
Can I do another?
Yeah. So what you have to do is log out of that
Okay.
and log back in. If you've already clicked that invitation, accept invitation, it'll now show 2 when you log back in.
No, she can't, but no, but I don't know. She's not able to.
Ah, okay.
Because my search is.
Ah, okay. No.
That's why I was asking if I
Right.
could decide it like manually or something like that.
Yeah, no.
Okay.
So the way they assign the licenses is by your email. That's why. I'm just trying to think of a way around it. Like if I could do it. I don't think I can. I can see your file, but I cannot see your license.
No. You need Safari.
All right, so when it comes up with that piece of interview,
Can I just email the email to her?
no, because your license.
Oh. So she just has to get into her email account,
Yeah.
right? And fill it in. Yeah.
I think I can resend it to them. Click on the back.
So from here, Mr. Guerra, it's over. Okay. I just want to follow whatever you do.
Okay, so go ahead, sell products.
Yeah, because then I just, if I get behind or confused, I just follow steps. Yeah, right.
So we're gonna have. Wants to link your checking account.
Okay.
That's good for now. So once it comes up, in the upper right-hand corner of your windows, here you should see a gear. If you remember from the beginning class, that's where we accessed our chart of accounts. So that gear will get you to all the controls. And that's what we're going to use now. And I'm going to go to account settings here under your company. So when it comes up, it's going to have the company name. Now, of course, my name is not Advanced Bookkeeping. So I'm going to change that and give it a new company name. You get to make it up. It could be anything you want. If you already have one you're happy with, it's fine. I'm going to click on this little pencil in the upper right-hand corner. And that's going to let me change all this information. So it goes by group, which is kind of odd. You'd think it could change everything at once, but that's not their style. At the top here, you'll see company logo. We're going to add a company logo later on. for now, I'm gonna make up my name. Let's call it Dan's Enterprises. By the way, a lot of people use the name Enterprises in their business name. If I were serious, I wouldn't do it because a lot of the scammers tend to use Enterprises. But you can, it's just you'll see a lot of those. And then you're going to say that legal name is same as legal name. I'm going to turn that off. So I'm going to say, this is my name. And this time, I'm going to put in a social security number, although I'm going to make it up. There you go. So the way that Social Security works is last time we used the EIN. That's a federal employment ID number, employer ID number. So those are free and you get them from the federal government. Even the state, California, requires that number if you want to have it as a separate business. By putting it under my Social Security number, which is 1, 2, 3, 4, 5, 6, 7, 8, 9, it means I am personally responsible for everything. So that's the difference. If you want to protect yourself legally, what you can do is get a federal ID number and set it up as a partnership. Or you could set up as a sole proprietor with the federal ID number. And then there's at least one step away. But for convenience, you can use a Social Security number. So we'll just do that for now. I'm going to click on the next pencil where it says tax form. And again, if it's sole proprietor, you're using the 1040. It should sound familiar because that's your personal taxes. So your business goes on your personal taxes. And if you're doing anything like, I don't know, it might be under $1,000 a year, yeah, might as well. So that'd save you a little time. If you think you're going to do more, then definitely get that number. So there is a rule that, let's see how this goes. If you pay any individual $600 or more throughout the year, you are supposed to file as their employer. You're supposed to collect, either start doing withholdings or declare them to be a 1099 contractor. So that amount was set many, many years ago. $600 a year, that's nothing. It's like $50 a month, right? So if you have a neighborhood kid mowing your lawn and they charge $55 a month, you are their employer. You're supposed to be doing either withholdings or you file it, what's called a 1099. Do people do that? Nope. And then when they get nominated to be some kind of office in Washington, they do a background check. Turns out they didn't pay their housekeeper, gardener, or any of that and withhold their taxes. So there's a big scramble and they do it now and they don't go to jail for it, but they are supposed to. If anybody pays you $600 for services or products, they are supposed to file it too. And of course, nobody ever does. Not for little things, right? So we're all lawbreakers. Yeah, that's the way it goes. That number really needs to be changed because I don't remember when it was set, but it was like the 1940s or something. And back then, $600, that's a pretty big number. There was a new rule, I don't know if you saw this, PayPal and all those payment companies, when they passed I think it was the Inflation Act. It's one of those. Anyway, when they passed it, they had part of it where they have to report if they pay out to any person, I think it was like $600 or $800 or something. And that threw a lot of people into a tizzy because they were using that as just like a payment system. So one example where that doesn't make a lot of sense would be people who do work, but they get reimbursed for some money and then get paid on top. So I think an example I used before was secret shoppers. They hire people to go into stores or restaurants and pretend like they're a customer. I mean, they really are a customer. And they go through the shop, and when they're done, they go home, they write it up and say, okay, I was treated nicely, and here's what they said, here's how I was charged, what went smoothly, what didn't work, like that. And then they are paid a little amount, like $10, but they're also reimbursed for their purchases. So let's say they're paid $10 and they bought something for $10. Now they just doubled it to 20. Do 4 of those in a month, every month, now you're over 600. PayPal would have to report you. And then you have to explain to the IRS, no. Here's the percentage that was supposed to be my pay, which is under 600. The rest was reimbursement. Through all that. So what they did is people are dropping PayPal and trying to find other ways of doing it. And direct deposits work. But I mean, that's the problem is they make these rules and it sounds great, but then people try to figure out ways, well, I don't want to deal with that. I want to work my way around it. And so they change their habits to get around it. So that's one of the things you'll notice when you're in business is there are a lot of rules to follow. Luckily, QuickBooks will help you follow them. If you don't want to get audited and you are setting up a business or you're working with a business and they say, you know what, I'm a sole proprietor. Any ideas what we could do so I don't get audited? Make yourself a partnership. Find a partner, even if it's a spouse, make them the partner. Partnerships are less likely to be audited and reviewed than sole proprietors. Sole proprietors are usually, I hate to say this, but easy hits for an agent to go after because almost always they find something, right? Because people don't know. It's their first time, they're doing by themselves, they'll make mistakes. And then if you're trying to show your boss, hey, look, I caught all these mistakes, they're easy marks. I knew a guy, it wasn't financial audits, he was doing the program audits for another school. He used to do things wrong intentionally on one item. And it wasn't a very big item. You know, it was like when students came in, maybe he had them put their time in, but he maybe supposed to log the time out, but instead of doing that, he put in how long they were there. So it came in at 1 o'clock, 2 hours. Knowing the auditor is going to say, you know, that's not the way we like it. We like it to be this. I'm going to have to put this as a finding. Okay, we'll fix that, right? And then the auditor caught something, so they're happy. And then he feels happy because he didn't get hit on something else that could have been worse. I don't know if that's a good strategy or not. But that's what happens. All right, so the tax form is here. Here is where you could reset your industry. So if you've already got it as a certain industry type and you want to change it, you can. Last time we did retail, I'm going to call it department store. Oops. I typed too fast. So when I type in retail, you'll see the different types of retail businesses that come up. And I'm just going to be a miscellaneous store retailer. This industry is just for QuickBooks purposes. So if you're setting this up using another software system, they might not ask you this. But it's QuickBooks trying to customize itself to what it anticipates your needs are going to be. You'll see now, the next item here, we have the company email. This is the email I use to sign up and register my QuickBooks, so it automatically carried over. If that's the one you want to have contact with QuickBooks, and you can leave it that way. If you have another one, you can put it in here. You'll see there's another spot for an email. It's called the customer facing email. Now in my case, it's the same. However, there are times where this is maybe your personal email or your administrative email. And if you want customers to contact you, you want them to go to your customer service or something like that. So it's a different email address. So you can put that here if I wanted to. So I could just make that up. And then on all your invoices and all your information for the customers, they won't see my administrative email, they'll see the customer service email. And that way, if they decide to write, they'll all go through there. And then you can set up a company phone number and a website. I'll leave those blank for now. If you use the Easy Step interview to set up your QuickBooks, this usually gets filled out for you. We're just doing it manually because this is the advanced class. So this is a little bit harder way because you just have to go through all these manually. Oops. So you're going to see something similar with these addresses. There's going to be the company address and then the company or customer facing address. So again, if you had an administrative headquarters, it could be your house that you want all the admin mail to go to, but you don't want your customers mailing stuff to your house. You want them mailing it to the store. Then you can have this customer facing address here.
So every time that we see like a customer facing email or address or telephone number, that means that it's like.
That's what the customer's going to see.
You want your customers to come to.
Right.
Or send something.
Right. So that way you're kind of divvying up where things go. And this will show, it's mostly on invoices and sales receipts. There'll be your header at the top, and this is the information that'll be included. So again, if you're trying to protect it. Same as, I don't know if you ever registered a website. If you register your own website, if you put your personal email address down and your personal address, people can look it up. And they're not supposed to look it up unless they have a good reason to. But do they? Yeah. Question? Sure. Yeah. You could set a PO box, just make sure that you check the PO box because that's where all the money is going to go, right? When they pay their invoices. But definitely. And, for a long time, we didn't use a PO box. And then our mail got broken into a couple times. Okay, we need a PO box. So that's another reason to have it. And that's a good example of the customer facing address. And then the legal address is where any official government type documents would go. And again, this can be either one of the two, but you have to pick one. If you become a corporation, you actually have to have an address. It's called the process for service address, meaning if anybody ever sues you, they have to deliver the documents to you, right? They can't just sue you without telling you. That wouldn't be fair. So they have to send a process server out and they physically deliver it. And then you have to register this address with the state. So that all the lawyers will know, if I want to sue Dan, here's where I go. And I'll serve it. And if you want it to be your house, you can, or it can be the business, but that's up to you. And then down here, you've got marketing preferences with QuickBooks. It'll open a new window. This is all the stuff QuickBooks is going to send you, like updates and things. Unfortunately, there are some good updates to get. Others, it's really kind of just almost spam from QuickBooks because they're going to say all their products. And they have a lot. In fact, if you need a loan, they had a loan company as part of the program for a while too. I'll close that so we can go back to this. Real quick on the billing and subscription here. This will tell you your license, and right up here in the upper left-hand corner, if you're using the new QuickBooks we started up today, it's going to say this ends October 2023 for free, right? And then next year, if you want to keep it, you're supposed to subscribe to it. So it kind of tells you what the status is of all your licenses. You'll see there's other things you can subscribe to, including the payroll service, QuickBooks Live full service bookkeeping, which means you actually can have a bookkeeper live anytime, 24/7. If you got problems, you can subscribe to that service. The payroll service will help you with employees. We're going to set up employees later on, but we're going to do it manually just because we don't want to pay for them. Just FYI though, if you are going to have employees, even if you're going to have one employee, definitely do this payroll because I think it's like, they tell you here, I think it's like $7 an employee or something a month, but they do so much, including keeping track of all the employment laws. And if anything's going to change, employment laws change all the time. So during COVID, they, I don't know if you remember, there was this big tax break. They call it tax break. Really what it was is they told employers, okay, don't withhold as much as you normally do, like cut it in half or something. I forget what the amount was. Okay, well, then your QuickBooks would automatically do it right? And then your employees get more money, they think they're rich, they go spend stuff and the economy goes up. And then when they pay their taxes, they all get upset because, hey, I didn't get a bigger refund this year, what happened? Well, they didn't withhold as much. Normally, and we'll get into this when we get into payroll, employees tend to have more withheld than really is absolutely necessary. And that's a lot of times just because of estimating. But what that means is April 15th, when they file their taxes, they get their big chunk of money back. And they're all happy, like, look what I got. Well, you actually had that money all year long, It was a free loan you gave to the government. Now they're paying you back without giving you any interest. So it's a good idea to try to keep those as accurate as possible. Although one friend of mine always thought it was like a gift. And I said, well, it's not a gift, it was your money. He says, I know. I said, what you should do is you update your W-4. He says, no, I want it this way. Because if I got paid every month, I would spend it. This way, I'm forced to save it till April 15th, and I get a big refund check, and then I can go buy a computer or something. I said, well, you could do the same thing with like a little savings account, maybe get some interest. Nope. He said, I know me, I'll spend it. I said, oh, okay, you know you. So that worked for him. So that, I guess that's one way to do it. I don't know. Well, it works funny that way, because if it's the other way around, where you don't pay the government enough, you have to pay a percentage of interest on what you didn't pay when you were supposed to. And their interest rates are tough. So it doesn't work both ways. Let's go to usage over here on the left. And you'll see the setup. And right now we have one user, we can have 5. So if you do set this up as a real live QuickBooks for your company, you can have other people work on it with you. You can share a password with them. You can set up to 4 others. So 4 plus you is 5. So if you have a bookkeeper, if you hire an accountant, even at the end of the year, and you want to make them a user, they can tie into this too. You just give them the password and make them a user. They can pull all your information up, do your taxes, say, here, sign this, and you're done. So they can count as a user too. And then we've used the chart of accounts before. You'll see I don't have any on this one. On the sales, this is all the defaults for the sales. So we're setting up our customers. We're going to make some changes now because we're going to do some advanced things. So right now it's set up with our preferred invoice terms at the top. So net 30, we're going to leave that the same. But down below, we're going to turn on discounts. We're also going to turn on the deposit accounts. And we're not going to accept tips. But if you were doing a restaurant, put here, accept tips. And save. Discounts and deposit. These two here. If you don't do it, when we go into adding a discount for our customers and it says, there's no place for discounts, go back and check this, it's probably off. Okay, it is 6:59, so we'll take a 10-minute break between the hours. So it's break time. We'll come back at 7:09.
Yo con mi teléfono son Outlook por Thursday I have to work. Thursday I have to leave at 7:12. And then I have to class at 2. Yeah.
All right, so we're back from break. The next thing we want to change is in the next group down here. So I'm going to click a little pencil. So we definitely want to have this turned on, the track inventory quantity on hand. So if that's gray, click it so it's green. By doing it this way, we'll be able to set up the inventory tracking, and it will tell us how many we have on hand. It's not required for QuickBooks or for anybody to do this. It's just a handy extra little thing that you can turn on. And when you do, it gives you this little notice that you're about to turn into inventory tracking. And QuickBooks uses what's called FIFO, first in, first out. Meaning if I buy, say I'm selling foods, and I buy 10 blocks of cheese today. Tomorrow, I buy another 10 blocks. Customer comes in and wants to buy 5 blocks of cheese. QuickBooks will try to sell them the older ones first. The first ones that came in, go out first, right? So that way you're not having stuff that's sitting on a shelf getting older and older and older just because newer stuff's come in and sold. So the computer is going to assume that you're selling everything older first. And where that can make a difference is in, let's say, again, cheese. So when you buy the cheese, it's costing you $1 a pound, right? And you're selling it for $3. It's good mark. Turns out, we saw this, we're about to face a milk, butter, cheese shortage come the holidays. So the prices are going to go up. So now you can't buy it for $1 anymore because they won't sell it to you for that. They want to charge you $1.25 a pound. All right, went up 25%. So now all the cheese you buy from that point forward is going to cost you more. QuickBooks will always assume that when you sell cheese, if you have any that you bought at the $1 a pound, that's going to go first. So when it figures out your profits, it uses that, the oldest first, and assumes when those get all used up, then you'll switch over to the more expensive ones. And so when it figures out your profits, that's the basis it's going to do that. Okay, and that's natural. If it's something though that doesn't have a date stamp, so it might be, say, rocking horse. You know, they don't put in rocking horse, expires February 2023. Instead, QuickBooks will still track it that way. If you spent less on it, less on the early ones and more on the later ones, it's going to always assume that you're getting rid of the early ones first. Does that really matter if they're exactly the same? No, bottom line, doesn't make any difference. People can't tell the difference. They're going to be exactly the same models. If, on the other hand, there are smartphones, that can be a huge difference because they are constantly changing the model numbers. And you'll see if you're like, if you break a cell phone, you have to go upgrade. If you look at the model number, it'll be a long old thing. And maybe the old one was a 1501, and now this one's a 1672. So along the way, they made a whole bunch of changes. And so there are differences. And when it comes to reselling, some things can be very sensitive to that, especially a thing like a smartphone that has these constant upgrades, because you won't be able to sell the older ones because those are being phased out or whatever. So just keep that in mind. That's what QuickBooks is going to assume. And then it says, of course, if you don't understand what I just told you, go talk to a bookkeeper. They do that a lot. You know, the reason is technically they just gave us financial advice, right, of how to do our inventory. So say I do that, somehow I lose money. Well, let's say I do the smartphone thing and I don't do it right, I'll try to blame QuickBooks. And that's why they say, oh, no, don't blame us. We told you this is not advice. Go talk to a bookkeeper. You know, we're telling you how the software works, and they're trying to get out of the liability. So, you know, and that's always true. If you really do have questions, it doesn't hurt to call a bookkeeper. The other thing we're going to turn on is late fees. Sorry, customers. If you don't pay us, we're going to start charging it. So if you were the beginning classes, we had this turned off. Oh, I didn't save. There it goes. So as invoices are overdue, we're going to start charging. Now we have to set up how much. So this is one of those things too, you do have to kind of be careful about. If you do this a lot, you start running into, you're making a loan. So you got to be very careful because you can break rules on this. Did you hear about Kim Kardashian? So she had this cryptocurrency company paid her to tell all people she knows that this cryptocurrency is great. So she did I think it was a tweet, said, this is not financial advice, but there's this cryptocurrency I've been hearing a lot about, and I bought some. Okay, so a whole bunch of her fans bought a whole bunch of it, and then within a week, it crashed. So they went after her, and the FCC fined her $15 million because she didn't tell everybody, oh, and by the way, they are paying me to plug this. So because of that, she got dinged more than they paid her. So she's not going to do, and she had to promise not to endorse any cryptocurrency for 30 years. So that, yeah, it was pretty severe. So that's, you know, that's one of those things you kind of, when you start getting into more things, you got to be careful about this. And this one could be, because if you start charging interest and then you're charging interest on the interest, it becomes very close to a loan. And there are rules for that kick in, especially in California. If any state has rules for it, California and Hawaii have the most rules for everything. So we're not going to be too fussy about it. However, you're going to see the percentage of the remaining balance. So I'm going to just make it 10%, just to keep it simple. And you'll see how often do you want to charge this. So this is going to be a flat fee, $10 once per month. So that means every month they don't pay $10. The other way to do this is percentage of remaining balance. Let's say we'll do 2% per, I don't want to do 2% per day, because you know what happens? Remember that thing we did in the beginning class where I asked you, would you rather have $1 million or a penny on the first day and double it? This is what happens.
Cool. That was really cool.
Yeah,
Wow.
this is what happened. If you start charging your customers 2% a day, think, well, that's not much. Well, for the 30th day, it's going to be interest on the interest on the interest on the interest on the interest for
I
30
would
days.
never thought about that. Like, wow, that is really cool. That
Yeah,
is a
sneaky,
good
huh?
plan.
Yeah. So usually you do it per month or per invoice. If you're doing quarterly invoices, meaning you do it every 3 months, then you can do it once per invoice. The general rule is you can't do any of this until you inform the customers. And the best thing is get them to sign off on something. And even if it's it's a welcome to our shop package, and then they sign off. And of course, in the fine print, you say that what the fees are. Great, that counts. If at the cash register, you have a sign that says late invoices will be charged a 2% fee, take a picture of it. So that way you can see, anybody ever questions it, oh no, it's been there the whole time. Everybody who came in could see it. And on your invoices, put at the bottom, late invoices will be charged 2% per month or whatever you're charging. So you could set up any percentage here, whatever you want. In addition to the percentage, you'll see this point down here. Apply an upfront one-time flat fee. If you turn this on, they get a double whammy. So I'm going to change this because I used 10 before. I'm going to say 8. So what this means is now my customers are late. I'm going to hit them with an $8 fee. I'll call it a service fee or something, administrative service fee. Then in addition to that, 2% on what they owe me. So they get a double whammy here. Again, if you're going to do this, be upfront about it and warn them. What'll happen is the people who need to know this, who are actually going to get stuck with it, won't read it. And that just kind of happens. People are conscientious, will, and say, oh, okay, I understand that. And they'll never be late because they'll be conscientious. It'll be the people who just are in a hurry and let things slide that'll kind of miss this. This one, that's kind of rare. But depending on the type of business, this could be a pretty standard thing. As you've seen, when you're working with inventory, having cash flow, meaning cash coming in, cash going out, is really important to your business. If somebody clogs it up by not paying their bill, then you can't buy more stuff and you can't make more money and you can't help other customers. So most companies don't use this to make money, all of this here, the late fees. They do this as the stick and the carrot and the stick. Basically to tell customers, make sure you pay your bills. Otherwise, we're going to charge you. And usually people say, oh yeah, I want to pay more for what I already paid for. I'll definitely pay it on time. And then good, that's what you want. That's the goal of this. The problem is there are a couple people who will be your worst problems. Then you can actually set up a grace period. I'm going to turn off my upfront fee, by the way, because I don't really want to get into all that. Just be 2% per month. Not a lot, but it's enough to be an annoyance. And once the customer sees that each month it goes up and up and up, they figure I better do it now to keep it from going up anymore. The trick comes in, what if they pay you your initial amount, but not any of the interest? See, that's, if you ever, by the way, if you're ever on the other side of this, where you're the customer, do that, see what happens. Usually they just drop the interest. Because if they say, let's say you have a $50 bill and you've accrued over 3 months, $6 in interest. So you send them a check for $50 and they accept it. That $6 is all interest. Now, if they charge you more interest, they're charging interest on the interest. And it becomes close to what's called usury. I don't know if you've heard that one. Usury is where you're basically doing loans without doing the right way of doing loans. So you're basically taking advantage. And a lot of companies definitely don't want to do that, so they'll just drop it. Or they'll give you a call and say, hey, let's split it. Okay, the page we are on is under, let me go back real quick. To get to where we were, you have to use the little cog up here, the gear, and we're going to go into settings. And when my computer comes up, I'm going to go back to right where I was. And we're just essentially setting up QuickBooks for the advanced class. Here it is. And it's account and settings right here. So if you missed that part, that's where we're at. When you're doing your late fees, like I said, usually it's just to keep things running smoothly. However, there are some companies that do use this as a way of making a little extra money because it is basically free money. All it costs them is time. And for people who have a lot of cash flow, time's nothing. I don't have to have the money. I can keep my business going without it. But I want to really tell my customers who are late, I'm going to take advantage of that. And I think I've used this story before, but Modesto Irrigation District had terms of 30 days to pay your bill for your electric bill in Modesto. They changed their whole system over to brand new software. All of a sudden, people who were paying on time normally started getting late fees. And they charged, I think they charged like 1%. Wasn't a lot, but for people who never had late fees before, got really mad. And what happened was their software, instead of 30 days, it said 1 month. And then the month it used for some reason was February, which only has 28 days. Right? So anybody who was saving and doing their payment online, they would do it on the 29th day. Well, the computer thought, no, you're 1 day late, so you get a percentage. And they said, no, that's not the way we've done it. And so they tried to fix it. They couldn't get the software to fix. So they came out with a notice to everybody. Dear customers, thank you for being a loyal. Whenever you see thank you for being a loyal customer, you know, okay, here it comes. And sure enough, we have changed our policies. Now all invoices are due 28 days after the invoice date. So rather than change the software, they've changed all their customers, which of course they all go mad, but what can you do? You need the electricity. And so you just have to pay in 28 days now instead of 30. So under sales, I was on late fees here and I'm turning on my late fee. And so doing, I'm going to set a percentage here. The other option was the flat fee, charge them $1 every month instead of a percentage. The next thing you can do is do a grace period. So again, in this MID example, what they should have done, but maybe the software wouldn't let them do this, is set up a 2-day grace period. Meaning, okay, technically it is due 28 days later, but you'll give them 2 days extra to pay it before the late fees kick in. And that's what you could do here. You can say, all right, I'm going to be generous. Sure, it's due 30 days, but if they miss it, still get it in within 5 days, I won't charge the late fee. So that's the grace period, right? Technically it's late, but we're not going to charge it till after those 5 days. Or you could say 1 day or whatever. It lets you go 30 days. I don't know why you would do 30 days. That's pretty generous. But like even mortgages, a lot of times it's 15 days. 15 days past the due date. And they'll still count it as on time, even though it technically wasn't. So I'll set it to 5. And then what it's going to do is on our products list, you're going to see this, the late fee. There is a warning here that if at any point you delete this, this will automatically get turned off. And if you want it back on, you have to go do this all over again. So it's no big deal. The other thing with late fees too is you have to be fair, meaning if you are giving one person a break and they call up and they say, oh, I'm so sorry. Oh, yes, that's terrible. Oh, inflation's been so hard. Okay, we'll let it go this time. All right, you did it for that person. Why did you do it for that person and not for the next 3 people, right? Once you start making exceptions, that's why a lot of places try not to make exceptions, because then you start having to justify. Because if you're doing it for the wrong reasons, then you get in trouble as a business owner. So you want to make sure you're doing it for the right reasons.
Can you see the option in my email for the late fee?
Okay, this has to be turned on first under sales.
Yeah, I have everything, just the one at the bottom where it says you have under 5 days.
Okay, you have products and service. Do you see this late fees?
Uh-huh.
Okay, and so when I turn it on, and all that stuff pops up below.
Mhm. Yeah, I'm good until 5 days. And then
You don't see 5 days?
I do have the 5 days and then the last one where you put to the late fee.
Okay. On yours, it might already be set up on your list.
Yeah.
If it's not here, it has to be, because that's the only way it can charge it. It'll actually set up an account and the product name as late fee. So if you don't see this part here, it's okay,
Okay.
because it's got to be there. And then it's going to tell you in 2 sentences what I've been spending 10 minutes telling you about, is make sure you know the rules before you start doing late fees. And then here's one thing you can do. You can bluff. You can say you're going to charge late fees to scare the customers who pay late, right? Really scare them, like, you better pay up or we're coming over to your house, But more like, hey, if you don't pay, we can charge a late fee. And you can put all the notices, but never do it, right? Even if somebody's late, never do it. Then you're only under the jurisdiction of rules if you actually collect money for a late fee. The minute you collect 2 cents, okay, now you're under certain rules. So what some companies will do is they will make all the noises and have all the notices. And then when it comes time to do it, some customer's late, they call them up, say, hey, Dan, you didn't pay your bill last month. We're going to have to charge you a late fee. But I'll tell you what, you pay it right now up front, we'll waive the late fee. Oh, yeah, okay, right now. Here, I'm going to do it online and get it done. See? So it's a bluff. Even though if he said, you know what, I don't think I'm going to pay you. What are you going to do about it? He could say, well, don't forget your small claim court. Hang up. Better lawyer up. You can say that, even though your company is never going to bother doing it, right? It's only at the point you do it that it becomes an issue. Okay, so you can claim $10 fees, flat fees plus 5% interest, and then never actually do it. And again, for most of those customers, and I'll clear it up. And then they think you're doing them a favor because you waived late fees, even though you weren't really going to charge them. So that's another way people work around all those late fee laws, is by doing that. So there we go. Now late fees are on. Next thing we're going to change is progress invoicing. So I'm going to click on this little pencil. I'm going to turn this on. So what this will allow us to do is set up payment plans, basically, so people can pay off something in a certain amount of time. To do that, I have to update my invoice template. What it's referring to here is the form that it uses doesn't, when you don't have this turned on, it has no spot for progress payments. This will just add it. It'll add it in the form. So if you're going to do it, you definitely want to turn that on. So you update that. That's all done for you. And we'll see that in our invoices. And I'll click on Save. Okay, something we haven't used before is reminders. And you'll see that one. Let's turn that on. And if you want to send it out as an email, you can see here's what the default message will say. And I got that by turning on this here. So what it will do is it will use your customer's information to send them out a little note that their invoice is coming due. And then here you can set up which reminders you want to show. So in this case, reminder number 1, how many days before it's due do you want to send out the little email? So usually you don't go too soon. Turn on reminder 1. So like 3, that's pretty good. You don't really want to do it 30 days before, because that would be almost the day they buy it. They get an email. And that's kind of pushing, right? You can set up before, or you can set up after the due date if you want to do this. You'll notice there's, I think 3, right? 1, 2, yeah, 3 different reminders you can set up. So you can set up before on the date and then after if they don't pay it. The moment they pay it though, it turns off the reminders. Meaning, let's say on the 3 days before the invoice, they get it, they go onto your online system and pay it, or bring in a check to you personally. You put it in your QuickBooks against the invoice. Now the other 2 reminders don't go out. They're cut off because QuickBooks will say it's paid. I am going to go to this one on the due date. Reminder 2. And then again, this is the default email message. When you're sending it out, QuickBooks will tell you, and then you can modify this text. Otherwise, this will be the text we'll use. And if you want it to happen automatically, then you don't have to mess with it. And usually, the first one is, dear friend. And then the second one's, dear customer, right? And the third one is, hey, deadbeat, right? So, you get friendly and then not so friendly. But, in this case, have a great day. I know I will when I get your payment. And then let's go to number 3. So this would be like 3 days after. So if they miss the due date, this one would go out 3 after. This is the hey deadbeat. Okay. So we're not going to set up online delivery. But if you want to use QuickBooks as service where all your invoices can be paid online through QuickBooks' online payment system, you can set this up here. If you're using another payment system, so like you have an Etsy account, Etsy's handling all your payments, and you're basically copying the transactions into QuickBooks or uploading them, either way, then you wouldn't use this because QuickBooks is not going to handle the payments directly. So it's 2 options for you. You can either have QuickBooks do it or somebody else do it, and then you just key in the information in QuickBooks. Because we are going to have late fees now, make sure this is turned on. It should already be turned on by default. Statements. Let me hide these. So click on it. So the aging will show at the bottom of the statement. It'll basically show the customer how many days and how much they owe over the last, I think it's 6 months, 180 days. So you'll see down at the bottom, there'll be a box that says 30 days, and maybe they owe you $20. And maybe there's another invoice they didn't pay from a month ago. So it'll say 60 days, $45. And then if they've been 6 months delinquent, it'll show then how much was 6 months ago. So that'll show at the bottom of your statements. And that's kind of handy. It's kind of just a reminder to any customers slow pay that, look, we've been floating you for a while. And I understand times are tough, but tough for us too, and that kind of thing. So just having it down there shows that you're tracking. And that's all it's for. If you don't turn this on, QuickBooks will still track it. It just won't show to the customer. So again, that's kind of up to you. All right, so now let's take a look at our expenses here on the expense side. I'm going to go to this little pencil. Take a look at these. So the first two are pretty standard. Show the items table and expenses on the purchase form. So it's basically going to show when you send out or when you work with your vendors, the items and the expense that you're using. We're also going to turn on track expenses and items by customer. And then make expenses and items billable. What this is going to do is now allow us to work with our vendors directly from our customers. So this would be handy if you're doing special orders, things that you don't normally carry in your store, or if it's a customized order. So let's say they want a trophy and they want a certain words on the trophy. And you don't actually make it in your store. You're going to buy it from one of your vendors and turn around and sell it to your customer. So what you want to do is as you buy it from the vendor, you want QuickBooks to automatically turn around and bill the customer. So this is not going to go on the shelf. It's going to go straight to the customer. That's what you just did by track expenses and items by customer. So you're going to charge the customers directly for certain items or even expenses. And what I mean by expenses, remember the electric bill? Yeah, you could charge them a certain portion of electricity if you wanted to. If you wanted to transfer other expenses that you may normally carry in your store, but you're going to particularly do something with a customer, you can do that as well. Either way, items or expenses. You do get a decision here of a markup. So how much do you want in profit for doing this? If you don't say anything, the customer won't get charged, will get charged what you paid for, so you don't make any money. And remember, you're not being greedy. You got to pay the rent, you got to pay the lights, you got to pay the employee, and all that. So those expenses do go into your ability to provide this for the customer. So we'll just say it's a 33%. So you'll notice it says default rate, meaning, just like with so many other things, you can always override. So it's going to pop up automatically at 30%, 33% increase to the customer. If you say no, 25%. You can change it at that point. Right now, we're going to track the expenses and items as income in a single account. If you were a contractor, like you're building houses, and you're doing custom houses for customers, then you can set up multiple accounts here so that you get a more accurate accounting at the end of all the stuff you special ordered. And sometimes you'll need to do that. And we do want to charge sales tax. Remember, sales tax you don't get to keep, so it's not profit. It's basically pass through for the customer. You're charging on behalf of the state, and you turn around and collect the money and pay it to the state. Over here, these are the terms for our vendors. We're going to set this to net 30, because that is pretty standard. And we'll click on save. So when you're done, it should look like this. So again, we're just tinkering with how we're going to work with our vendors. Again, at any point, you can go and change these if you don't need it to work this way anymore. There are times where they will try to pass through expenses and then it doesn't work. And one good example was a trucking company. Gas prices went up. They added a fuel surcharge. I don't know if you're read your telephone bill, you see all these different charges. It's kind of what they tried to do. Their customers got so mad at them that they decided, okay, we'll remove it. You know what they did? They just raised their prices. And then they didn't get as much flack on that as having that fuel surcharge. Even though what they were trying to do is say, look, we're not trying to increase profits here, but this gas is costing us a lot. It's killing us. We need to make that money back, so we have to pass it on. So that's why they did fuel surcharge. Set this up. Customers hated it. Never make your customers mad. All right, that didn't work. Take it off. So they went back, turned it off, and then just took all their prices and upped their prices to about the same amount and did it that way. So, it's coming one way or the other. but sometimes just seeing it. In California, if you go to a fast food place, well, let's see, Subway, has to be like a sandwich place, and you order this sandwich plain, not cooked, not roasted, no melted cheese, nothing, just cold, you'll see the sales tax on it. Well, actually, wait, they don't charge it as food. It's counted, they charge it as food, so there's no sales tax. The minute they put it in the oven, you'll see you now get sales tax. So that's a certain circumstance where, because they now prepared it, Zan. So yes, yeah. If they've cooked it, that counts as preparing it. Assembling apparently doesn't count. I don't know why.
So we get a whole Subway. And
Yeah.
you don't get charged
Yeah.
tax?
Yeah,
But
'cause it's
they
food.
put it- But they put the cheese on the oven.
In the oven, they could put cheese on it. Fine. It's thick and they put it in the oven. This, I guess, this is the way it's explained to me. I don't know if they really knew, but they said because you could go to the store and buy the same ingredients and there wouldn't be sales tax, right? So essentially, that's what we're doing. We're selling you ham, bread, lettuce, right? Just little portions together. So therefore, legally, there's no sales tax. But the minute we cook it for you, and when they say cook, they mean just melt the cheese on it, right? That's cooking. Then now it is a finished product subject to sales tax. Just like McDonald's. McDonald's will charge sales tax because yes, they're selling food, but they're preparing it for you. And prepared foods get taxed. That's, yeah, go figure. That's the way our tax system works.
Interesting.
Well, and those are, who knows? The only reason you know that is because all of a sudden you never got charged sales tax, but now you ordered a melted cheese sandwich and now there's sales tax. What's going on? And you ask. Another one I ran into was we had a fence that the wind messed up. So I went and bought some wood, looked on my receipt, my sales tax plus 2% wood fee. So what's that? Oh, it's a thing they're doing in California now for sustainability. They're charging on all wood purchases, raw wood purchases, a percentage. And that's supposed to go help deforestation or wildfires or whatever. So he said, we don't keep it, we give it to the state. But if you buy a piece of furniture, you wouldn't have that on there. So yeah, that's the way it works. Because the furniture is not wood, even though it's made out of wood, you're not buying wood for wood's sake. But if you buy wood at the hardware store now, you pay this extra fee, which would be, let's say I want to make a table and sell it. If I go to the hardware store in California, I have to pay the fee. Then I make the table. I don't have to charge the fee, but I've already paid it. So what do? Well, I'm going to buy a whole bunch of wood. I'm going to drive to Nevada. They don't do that. Buy a whole bunch of wood there, drive it back in, make my stuff. And now I can sell it 2% less because Nevada doesn't have that fee. So it's crazy, but that's the way California is. I don't know if you saw just today, remember we had that, there was a ballot measure and it was about pork and chickens, that the chicken eggs have to be free range. They have to be let out. Chickens have to be let out. They can't just be cooped up all day. And if any egg is sold in California, even if it's from out of state, they have to comply with that. They have to say California, whatever, compliant. Same with pork. You can't just raise the pork in the small pen. They have to have room to, certain rules. They have to stretch out so much and things like that. Well, some people sued, and now that's going to the Supreme Court. It's there right now. And the question is, could California make that rule for itself, knowing it's going to affect every other state in the union? And I think it's Ohio that's suing. So Ohio wants to send their pork, but they don't want to do all those rules. And they said, we live in Ohio, we make our own rules. California, you can't make rules for us.
Wow.
And so now they're debating whether they can do that or not. Yeah, it'd be interesting. So it pays to watch the news, little things like that. And some of the stuff is really, you think like, who thinks of these things? But they do. All right, so you should see purchase orders already turned on. We've used those before. This keeps them on. Let's go real quick now to payments. This is the section where, again, QuickBooks provides you services. This is where I said, if you want QuickBooks to take your payments for you and put it directly into your account, you could set up here to do this. They do take a percentage, but it is worth it. When you're doing pricing, of your products and services, you do have to take this into account. Because if you're going to sell your product and you're trying to compete with other people, 50 cents can make a big difference. You can either be over or less than somebody else. And so what'll happen is, if you're using a payment processing system that's going to charge you 2%, you got to think, well, okay, now, sure, I can cut my price by 50 cents, but I'm also going to have to pay to get the money. So maybe now you're going to start losing money if you're not careful. So you'll see this, especially in gas stations, where they have the credit card price and the cash price. The reason is credit card companies charge them every time they use it, or every time you use a credit card with them. They get a percentage, plus there's a annual membership fee. Cash, of course, they don't pay anything. Yeah.
Sorry, we have to leave.
Okay, no problem.
We're gonna catch up.
Okay, we're almost done anyway because there's 12 minutes left. But so anyway, when you're calculating out how much profit you need to make to stay afloat, that's something you have to consider. Do you want to use the payment plan? Sure, it's convenient, but how close is that going to cut your price to your profits? So it can make a difference. And then what'll happen is, once you're established, QuickBooks will come along with a message to say, try our new service, and we'll give it to you 30 days for free. And then after that, it's only, whatever. And you think, okay, that's a good deal. Don't forget, okay, is it really? Check your prices. Are you making enough profit to cover that? Because that will be a new expense. You're welcome.
See you tomorrow.
Yeah, we'll see you tomorrow. Good night. The next thing we have is time, for time tracking. So if you're going to track time for a service, is where you put it. We're not going to quite do that. We'll come back to this later on in the class. We do want to get into advanced. So click on advanced. And if you recall from the beginning class, this is where you can set up your fiscal year. Set up for January. We are on the accrual method, which means the minute we send out an invoice, the computer is going to count that as good as paid. So we'll count it as income. So it's already set up. But if you ever need to change it, you can change it here. This is one thing you can change back and forth. So if you just want to see on a cash basis how much you're earning, and the accrual basis, you can do both. Run the reports and flip it back and forth. You'll notice here that we have modified the discounts. And so, oops, I crossed it out, but you'll see it said discounts given. So when we set that up, it changed here. This is under the chart of accounts. So there is going to be a discount account. And what that will do is it'll keep track of all the discounts you give. And at the end of the year, you can see how many discounts did we give and how much in value did we give as discounts. The one thing we're going to turn on this one is you're going to see it says track classes and track locations. So tracking classes means you can have different categories. So if you're a department store, you can have the hardware department, you can have the clothing department, things like that. If you're a large company, you can have a legal department, marketing department, production department, as such. You'll also see it says warn when a transaction isn't assigned a class. That means everything would have to be classified under a department. We're not going to do that. But if you're very strict, you really almost have separate businesses operating as each department, you can turn this on, and then QuickBooks will require you, or almost require you to do that. And then we'll track locations. And you'll see here, when it says locations, if you want, you could say department. So we'll change it to department. But you can also use the word division. So like schools have different divisions. If you had different locations, like the Patterson office and the Modesto office, you could set up that as a location. we'll leave that as department. Great. Okay, this is the next one we want to get to. So the automation, we do not want now QuickBooks to pre-fill the forms with previously entered content. That's the one where it would always carry over in the purchase orders, whatever purchase order we did before. And then we're going to turn on automatically invoice unbilled activity. So our choices are, we can have the computer remind us to create the invoice. This is something that if you've collected service, you've done service for a customer, you have not created the invoice, you can have the computer automatically do it. There's 3 levels. The first is just remind me. If I haven't done it, tell me and I'll do it. The other is create the invoice where the computer actually creates it and notify me. So it'll send you a note that it's doing it. And the third is go blind and automatically create the invoices and don't notify me. I mean, just let the QuickBooks do it. When you print the invoices, it'll go out. Usually it's done on the first of the month, but you'll see you can set it up. So the monthly, you can do it daily, weekly, yearly. Yearly would be kind of long. Everybody forgets what happened. You could set up which day of the month. We'll just leave it at the first of every month and monthly. Okay. So with that now, we are set up for tomorrow. Now, if you remember, in the beginning class, you had to do data entry for customers. Tomorrow, we're going to upload. So instead of having to do them individually, I'll send you a list. We'll just send them into QuickBooks and boom, automatically done. So that'll be fun. So any questions on the setup? When you're done, you can hit the close box. Let's see. I want to say, yeah. I want to say no. Yes. That didn't work. Yeah. I'm going to, as soon as we're done here, drop them an email and remind them again. I just don't know what they're going to do. And if they let me, I'll wipe it out and start fresh. I mean, that's all we need to do, but they're not my computer, so I can't tell them what to do, but I will remind them again. And then what I did, there's 2 of them that I think are easy fixes. All I got to do is fix the password. So I put notes on those, and maybe they'll just do those first, but just in case, if you don't mind. Sorry about that. All right, with that, we are done for the evening. You're welcome.
I don't receive my
Yeah, they didn't go out yet. Sorry about that. They will. They haven't been mailed yet.
Oh, okay.
But they will.
Thank you.
I did want to tell you about the Oreos.
Oh.
So I put them out, and sure enough, the older granddaughter, she took 5 of them. She scraped out the middle and made this huge stack of Oreos.
Oh.
And then her sister got the chocolate ones, because I think I told you.
Oh.
One likes the middle,
Yeah.
and the other one likes the chocolate cookie.
Oh.
So they make a good team.
The chocolate is better.
Yeah.
Yeah.
So thanks again for those.
Oh, you're welcome.
It was really funny to watch them do that.
Thank you.